What is up, everybody? Logan here again, and I've been away for about a month. As you guys know, I got COVID for a little bit, and then I actually got sick again as the weather started changing. So I just haven't gotten back into the swing of things. And then the market was also getting hit a little bit as well. I decided to have a couple bullish positions on through this entire pullback. So I rolled stuff for like 4 to 5 weeks, was doing a lot of small zero DTE, like day trading type stuff, right? I didn't want to keep too much money in overnight. But I do have a couple positions that are finally seeing the light of day now, which is sweet. And I'm joined again with Halcyon today, and we're going to go over just the market in general and just do an overview because there's a lot of people on both sides. There's a lot of people shorting now. There's a lot of people going long right now. And we're just going to take a look at some Keltner levels, or Keltner channels is another name for them, and just everything else overall. So I appreciate you coming back on, Halcyon.
Yeah, no problem, man. Good to be back on here. Similar to you, I would say the last probably 2 weeks or so, been dealing with just some annoying sickness items. I suppose that is how that goes this time of the year. But yeah, finally, feeling back to normal. Actually, today is kind of the first day in a while that I've actually felt a little bit more back to normal instead of death in the morning when I wake up. So that's a good space to be in. Helps be a little more clarity to what you're up to.
Absolutely.
So I thought, yeah, when we were talking about this, what do we want to talk through here? I think maybe introducing the concept of, kind of some price symmetry and what we might be seeing going on for the last, last chunk of the month here. It's been a while. We've had a little bit of a, downturn that we haven't seen in a while. That was kind of, I think for some people, completely on a, it was a lot. I mean, this whole section was a lot more choppy than what we were used to seeing. I mean, this was not a fun period of time to trade in. Like this was I think a lot of people got beat up pretty good in that, especially those who are like permanent bullish, and the buy the dip didn't work as well this go around as it has over the last, year and some change. I mean, basically every time you would buy the dip, you were at a good spot. So I mean, we go look back at, these various periods of time, like, buy the dip here, buy the dip here, buy the dip here, buy the dip down here, and again here, and again here. I mean, and again here. Just we seasoned ourselves to be prepared to buy. I mean, this was a little bit more funky over back in this area, but for the most part, it has been tried and true. Is whenever you get back to your 55-day moving average, just buy more into it.
Buy the dip.
Buy the dip, buy the effing dip. And this time, it blew right through that, hey, buy the dip. Yeah. Whoop, just kidding. Whoops. And then, people got really chewed up in here on options. I'm sure we got a lot of, negative thetas kicking your tail in. And, just this is an ugly and challenging period to be in. I know we were in a few trades that, we're, as we look back in hindsight, it's always perfect. It was, what were we doing? Why did we get into that position, on that put credit while we're dealing now with 5 weeks of, or 4 weeks of having to manage that position? And, that spot living rent free in our head for, all that period of time, whether that's affecting sleep or otherwise. But yeah, it's been an interesting spot. And then, a lot of times what I like to do when the personality of the market starts changing is you gotta step back for a second and really try to make sure that you are in tune with what's going on, because there is no faster way to give your money, to the market than not understanding what season it's in or what personality it's currently operating under. Because it can be a really frustrating experience. I mean, it can make you hate trading, is when everything you do, it goes the wrong way every single time. And again, a grindy sideways or whipsawing up and down market is absolutely going to do that to any kind of trend following system. And anything you do that's trend following, if you're not in a trend, it's really hard to make money in that. In fact, it's really easy to lose money in it. So, we decided to take a quick step back and just kind of look through what are we seeing in the general markets, and then what kind of clues might we have for, what to expect the second, this last quarter of the year and going into next year, which is weird to say we're already in freaking late October, basically.
Crazy.
So yeah, I mean, so a couple of things, that just stand out to me is, one is just kind of the theory of how price moves. And what I like to view this as, and I think the Keltner channels do a pretty good job of encapsulating this. Specifically, the bigger indexes tend to use the Keltner channels in the 55 as a pretty good marker for how price is going to move. Meaning that what it tends to do is it will rise up in a trending system. It'll rise up to the top end of the channel. Usually, these red lines are going to basically encapsulate the most of whatever it can go to on the top end of the movement. Then you come back and basically reload back at the 55, and you just keep doing that over and over again. That tends to be in a pretty good bullish uptrending, stock or index. That's how this works. Now, some stocks, they're going to use a different moving average for the Keltner. It might not be 55. It might be a 34. It might be a 21. It just depends on the characteristic of it. And you need to just basically pick one and choose to see on that individual stock is a more shorter moving average of more appropriate to use. But for SPX, NDX, RUT, I like to use and the NYA, I'd like to use the 55. I feel like that's a pretty good job of encapsulating the normal movement of that. So one of the kind of price movement pieces that happened here is what we expect to happen in bullish territories or bullish markets as you come back, reload, and keep going up and doing that. And then when it needs to do like a full correction where it basically resets the system, so to speak, is instead of sitting on the line and then popping back up, you actually go all the way back to the lower channel. And in a normal, I would say regular correction, what happens is you come to the bottom of the channel, you go back up and touch it, and you come back down again and touch the bottom of the channel and then race off. Now, interestingly enough, we didn't do that in the SPX. We sort of started that process, but then just kind of ripped up. And maybe this is a testament to the strength of people still permanently bullish for whatever freaking reason they are permanently bullish in this market at this point. I mean, again, there's theories behind this, but ultimately the money still is flowing in. Mm-hmm. And then as you look at what's happening here, I would say this is a confusing and bit of a challenging space to try to pick a direction of what's happening. Clearly right now, these last 5 days, we've broken back out. We've broken above the channel. We've broken above the 10-day moving average, which is a pretty good, trending system for what the SPX generally trades on. When you're below it, look at being more bearish, and when you're above it, look at being more bullish. And what I would expect now is this should go back and touch the red, top of the channel here. Now, again, this is exponential, so it's moving and adjusting. As if we keep dragging sideways a bit here, it'll start coming back down on us. But in a normal market that's healthy and trending, it will go back up and touch this. Mm-hmm. From a time frame perspective, it seems weird to say this because I'm not super, I'm not super bullish right now. But
same here.
If you had to take a guess and look at the timing of all this, I would say it's going to go up to the top of the red line by November, like the beginning of part of November. So in the next 2-3 weeks here, we're going to see it. If it's going to keep maintaining this trend, it'll do that. It will be up there sometime around November. And it seems weird to say that, but at the current, data that I'm calculating this off of, it seems to be about November 2nd, November 3rd, somewhere around there is going to be where that will peak up here, and then we'll have another little correction back. Now, the question is, do we go back to the 55, or do we do this some much broader, all the way back down to the lower end of the channel here? I have no idea, because there also is some potential that could suggest the money that has been kind of built up to come back into the market with this recent, very quick couple of week downtrend is also could be pushing from way back in here, like way back in July is actually where the buildup started. This just kind of was, a fake drifting up, but really in July is where this started. So really you could time it out that it's probably through the end of the year, if that's how it works out. Mm-hmm. So I think the beginning of November will be really telling. And if we keep drifting post the first part of November, then I would expect the rest of the year to be a bullish rest of the year. And then I guess we'll see what else the data is telling us, which seems so weird because I definitely feeling wise do not feel like that's accurate. Mm-hmm. But again, my feelings can absolutely be wrong. And, price action is king. So if price action is continuing to go up, it doesn't matter what I feel. And I can absolutely be right about this, but I can be wrong in my timing, and that doesn't help me out. I mean, so, and the reality is, as traders, our job is not to be right, it's to make money. And again, you got to follow the price action. So that's what SPX is telling me, is that I should remain bullish into at least the beginning of November. Really going to look to see, does the beginning of November have some kind of pullback take place? And if it does, then I can say, yep, we're staying on point with the correct price action here. So then I can reset to see where the next one's going to be. And if that's the case, great. And so I will say, so that's probably the stronger of the two NDX. The NDX is not internally nearly as strong as SPX. Again, pattern-wise, it looks pretty similar. This all looks very similar to itself. However, when you get under the hood of the NDX right now, the same level of the actual advancing and declining of the shares, it does not look anywhere near as healthy as it does for the SPX currently. Now, again, if we have some earnings that come out that are going to blow expectations away yet again, then maybe it will, rocket ship up and onward, upward. But right now, it's still kind of maintaining a slightly downtrend in the advanced decline line for the NDX, which is really surprising, to be honest. I would have expected it to be broken out at this point, but it has not been able to get through that. So we continue to keep an eye on that. Again, we've had so many quarters in a row now with earnings that have been absolutely out of control. If I had to guess what we would see for this next round we're just about to walk into here, is we're going to see earnings that aren't nearly as impressive as what it's been for the last couple of quarters. And I think that's the expectation. I'm pretty sure Wall Street and the banks have expected, and the analysts are expecting to not have such an amazing knockout quarter. So, we'll see. Maybe if there's some more purchasing going on or more consumption going on than was anticipated, maybe some of these numbers will come back better than expected. But, as the saying goes too, if you fall into earnings, you usually jump up after. And if you rise into earnings, you fall after the earnings. And we've been falling into them. So maybe, who knows, maybe we're going to keep running. I don't know. Right. But again, it doesn't feel like that makes a whole lot of sense to me.
Yeah. Personally. I'm right where you are with everything. I'm cautiously bullish in general, but with the lower type of volume we've seen over the last few days, like Monday and Tuesday in particular, where like volume distribution finishes lower than it opened the day, but the market was up 0.5%, right?
Sure.
Stuff like that, it just has me a little more cautiously bullish right now. And plus just experiencing the last month straight of just choppy in my own positions. It's going to take me a little bit before I totally reassess and start back on the, hey, I'm clean of positions, right? I mean, I plan on taking some off the table, but once I get some of those off the table, I can just reassess where we are overall. But yeah, I'm definitely a big fan of what you see as well, which is us drifting up to the top of the Keltner level or channel. But at the same time, we've had a 4.2% rotation over the last, since Thursday. So Thursday into Tuesday, last 4 days, we've seen a 4.2% rotation into SPY or SPX, where the highest we've seen all year was 5.3. And that was followed basically by September.
So here'd be probably a good thing, Logan, if you wouldn't mind. When you say rotation, I'm sure there's many people who aren't understanding what you mean by a rotation. And you want to define that a little bit?
Yeah. So if you take a look at the high of 45.40.05, right? So what we see here, we're at the top of the Keltner channel. The money starts to come out of stocks, which a lot of people like to call a rotation. Like if we are, or whether it's market makers or hedge funds, the market likes to move, like as you've seen, we have really crazy green days and really crazy red days. Now, that's not always the case, but when the market does decide to rotate, that's what we see. And that's what we're seeing right now, which this is where people make a bunch of money, is if you go long right before the market decides to push up 4%. Like Very rarely, if ever, do we see the market make a 10% run or a 10% drop, within a few days. It can do that through stock market crashes, but if it's just a typical market, we usually see something like 3 to 4%. And then that's when people decide to short the market. And basically, yeah, just a rotation is the money deciding to flip sides on the table, where you'll see more volume come in. You'll see the market decide to run up, whether we're coming back to the top of the Keltner level. So that's basically what I view as like the market rotating. Is you'll see, like right now we're at 4.2% from our Wednesday level from the bottom of Wednesday. So generally that right around this area is when the shorts decide to come back out. So I'm still bullish in general, but I do think we're going to pull back a little bit through the week. I think it's going to be, the VIX is low now. So the volatility might not be there like we're used to, but I do still think we're going to pull back a little bit or continue to stay flat. And then, like you said, after earnings come out, I think we'll see a drift up towards the top of the Keltner channel, depending on what we get, right? Depending on if it is bullish or bearish. And then after that, right, like if everything meets expectations, and I think Netflix actually kicks off earnings today after hours, before the big weeks next week with Apple and Google, Amazon, all those guys. So yeah, that's kind of what I'm seeing right now is, yeah, we do look very bullish in general, right? 5 big green days after the other, but we have seen more low volume, which we saw low volume selling right before we decided to rip back up. So that was one reason why I wasn't very bearish last week. And this week, I would say I'm more bearish than bullish, but overall, I'm more bullish. So I just think we'll see a small 1% pullback over the next week or so, or even if we stay flat. But I don't think we're going to continue up and see all-time highs this week. I would be very surprised. Like to see a 5.5% rotation or anything like that I would be very surprised to see that.
Yeah, I think for me, I think from a healthy perspective, I'd like to see the market, kind of drift here and then bounce up into this range around this period of time, this is the first week of November. This lets the moving average slowly catch up, which is, again, from a more healthy perspective, letting the 10-day slowly catch up, this drift down and touch it again, which it tends to do quite a bit. Like here's a good blast off run. We touch the 10-day and then it starts the next little run up. I'm going to guess we're going to see something like that action taking place here over the next few days. So what would likely happen here is that we get some kind of a, little bit of a choppy day on Wednesday or Thursday and Friday. The 10-day moving average comes up and catches back up to price, and then it gives it another little oomph back up, and we come up at the top of the channel at some point, which, again, if that happens right around the beginning of November, I'll probably be exiting positions from a long perspective, just in case. That again, it's always just a commission away to get back in, but that'd be too convenient to have all of that workout. It's that way, and that would also be spot on with the shorter term analysis that sometime around that early part of November is the kind of like the next little peak. Also, not be a great sign if that's right at the high, so it's kind of like a double top type environment there.
Right. Yeah, that would be.
But again, we're not gonna get worried about something that is a couple of weeks away here, and really it's. But we are keeping an eye on. Like for me, that's what I'm keeping an eye on. I think there is an argument to be made that's fairly reasonable expectation. I can also see the counter argument that it could extend a little longer into late November, early December as well. And again, that beginning of November is going to be a pretty big trigger for us to see what the word is here. Because I really don't think, unless we have some kind of weird, unexpected news coming out that has nothing to do with earnings, that's going to be our, something we can't plan for. That's about, I think, the only thing at this point that's going to completely derail that idea. Some kind of really terrible China news or some other similar style news comes out over the next couple of weeks here. But
absolutely,
we'll see. Be interested to see how the markets react. How market reacts to Netflix earnings will be a good predictor of how we see the rest of the the big tech and the FANGs react as well. So, act accordingly based off of that. So you get one heads up with Netflix, and I suspect we'll see Amazon, Google do very similar. Apple do very similar type of movement when they have their earnings. So
It has for sure. Awesome. Well, I appreciate you coming back on, man, for another one, and we'll have to have you on again later this week at some point. But I
yeah,
think just a good market overview. Like I said, I haven't been uploading as much and still trading, but more on the back burner right now of as far as taking new positions. I've been really nimble about it and just rolling with what I have on, that I've been carrying through the pullback. So
well, like we said earlier, talking about off camera here was, when you're in a market that's changing, you want to aim small and miss small, because going big in a market that's changing personalities is a fast way to just blow up your account. And
absolutely.
you just, when things get uncertain, it doesn't make sense to take big bets. I mean, it just really doesn't. You got to be patient and wait for the proper setups to show up again, and and then make sure that your trend following system, if that's what you're doing, is back on trend. Otherwise, you're just going to get crushed in that, and nobody wants to see people get beat up and lose a bunch of hard-earned money. So
absolutely, man.
Well, thanks, Logan, man. Appreciate having me on.
Yes, sir. All right, that's going to be everything for Halcyon and I, guys. Don't forget to leave a like, comment below, and also subscribe if you'd like to watch more. But I appreciate you guys for all the support. We're pushing 9,500 subscribers, which is just nuts. I'd love to hit 10K by the end of the year. And like I said, I don't plan on stopping uploading or stopping any sort of trading. I had to take a break because when you're feeling absolutely under the weather, it is just hard to do what you normally do every day. So I appreciate you guys hanging out nonetheless and continuing to watch, even though I haven't uploaded in a few weeks. But that's going to be everything for us, and we will see you guys in the next video.
Peace.